Hello, Jim here. Today I want to talk about what I call repeatable trades, trades that are very profitable and can make a big difference for your monthly income each and every month. I'm going to share with you the ones that I've recently had. These are completed trades, trades that are no longer out there, meaning I've either closed them or they expired. I'm going to go through each one, and I'm also going to talk about what makes them work, how they can potentially be repeatable. So stay tuned. I think it's going to be well worth your while. Right in. It's been a crazy couple of days. I want to do a quick market update. With the presidential election over and it looks like Trump taking over, the market has hit new highs. It was way up yesterday. It's up again today. And now just recently, about 20 minutes ago, the Fed came out and they did another quarter point cut. So what does that mean for the markets? I believe the markets are a little bit giddy and probably a little bit ahead of themselves. I think they're overbought, so I'm being patient. I'm taking my time. I'm not rushing in to try to make trades because I do think we're going to probably come back to the mean, meaning a lot of the stocks that have gone way up will probably come down. A lot of the things or issues that we had before the election are still there. I still think we're potentially in kind of a rough economy. There definitely is hope around the corner with some changes. But I do think people need to stay safe. Don't be doing crazy trades. It's a time to kind of reflect and, in a sense, make plans for next year because the economy is definitely going to be different and the market's going to be different. So, like I said before, I'm taking it slow and steady. I'm not making a ton of trades. I actually have not made a trade today. I'm not sure I'm going to make one. And I think I closed. In the last 2 days, I've closed 2 or 3 trades and only rolled one trade. So I'm taking it slow. I want to see kind of what happens. I want things to settle down. Now, with almost all my videos, I always talk about finding great companies or ETFs and, looking at the fundamentals. What makes a great company? In my mind, a great company is a company who is well run, meaning the management has probably been there for a while. They have a marketing person running the company. I've seen some companies go through rough spells. I believe Intel and Coke did a while back, probably 10, 15 years ago, when they hired a financial guy to run the company. So I think having management, at least at the top of the organization, that's a marketing person is typically better. So keeping an eye on major changes in management, where maybe the CEO has left recently or the COO or the CFO, they could be signs that there's issues. The other pieces of information I typically look at is debt to equity. Is the company, does it have too much debt? I like less than a 50% debt to equity, meaning for every dollar of debt, you have maybe $2 of equity. Some companies that I trade in have no debt, and I really like no debt. I also like to see good profitability. I like to see return on equity hopefully above 20%, at least positive. And return on assets, I like to see that in the teens. I also like to see good, healthy profit margins and good cash flow, that the company is bringing in quite a bit of cash flow, and their balance sheet typically looks pretty good because of that. I also like to see where if they have dividends, they're growing dividends. Their payout ratio is relatively low, meaning they have plenty of cash to pay out future dividends or to grow those dividends. And I also like to see that they're growing. They have some growth. If they're a giant company, not necessarily huge growth, but maybe they're becoming more profitable. Maybe they're, thinning some of their expenses, and maybe profitability or income is going up. I like to see the year-over-year income and see how that compares to previous quarters, and that they tend to have an upward momentum, not, hopefully not negative, but sideways is also okay, depending on the situation with the company. So just a few things to look at. Now, for ETFs, I like less expensive ETFs. I like ETFs that have really good holdings or holdings I like. Some of the ones I like are SCHD, XLE. I also I'll trade in IJH, IJR. I will sell some options on IWM. instead of SPY. So I'll also look at ETFs. I do find that ETFs are a little bit safer when you're trading options. They don't necessarily move as much, primarily because they don't have earnings. Earnings really cause companies to move majorly, either negative or positive. It seems like more negative news can really have a major impact, or negative guidance. So that's just a few of the things that I like to look at. Now, I also like to kind of rank my trades, look at what trades are doing better. And I typically do it quarterly. I'll go back over the previous 3 months. I'll look what companies were assigned to me, why were they assigned to me, what could I have done different. I also will typically look at, return on investment. I like to do that. Some people don't want to do it, but I usually sort by return on investment. And I typically do that. You can't really compare a cash secured put with a vertical put credit spread, but you can compare a cash secured put with a covered call. Vertical put credit spreads kind of stand on their own because you're using less equity to make the trade. So I will compare those to each other. And I do find that the big boys seem to do a lot better, like the vertical put credit spreads on NVIDIA typically do really well, or AMD, or Applied Materials, or even Qualcomm. I just find that they typically have more premium than most other companies. Also, that's true with companies like Square and Twilio and some of those names. Now, when you deal with ETFs, you make less, but they're safer. They don't move as much, so the chance of them being assigned to you or away from you is typically less. So during these kind of crazy times when the market's hitting these higher and higher levels, trading in ETFs is one choice that you could potentially make to try to keep the risk reduced, but to continue to trade. The worst thing you can do is to stop trading, but I do less trading during these kind of times. We will have an adjustment the other way at some point. It's not if, it's a matter of when. So, and then I do fewer trades with higher premium. Now I'm beginning, when I rank the trades, I'm trying to identify what's a really good trade, and maybe I'll do 3 contracts. I started with 1 contract when I first started my journey, then I went to 2. Now in some of my positions, I'm doing 3, like with XLE. One of the recent vertical put credit spreads I did with XLE had 3 contracts, and in some cases I may go to 4 if I think it's a really good trade. It's just something to kind of keep in mind. And because of that, each trade, if it has 3 or 4 contracts versus 1 or 2, the premium is a lot higher. So you can potentially make almost as much and do fewer trades. I typically have around 80 trades open at any one time. Half those are covered calls. The others are puts, either cash secured puts or vertical put credit spreads. But I probably have 3 vertical put credit spreads to every cash secured put. The exception being is where I'm running the wheel. And those are the only cash secured puts I have right now. I'm running the wheel. I've done previous videos, and I'll talk a little bit more about that at the end of this video, where I share some of my recent trades. 2 of those were closing Twilio, which became very, very profitable. So, and then I also look at myself so there's people who just purely want to do trading, and I have some of those in my membership. They don't really care to own the stock. They just want to do something like a 0 DTE trade, or trade in futures, or trade in the indexes. They don't really care to own the stock, and they can do quite well. So, but it's just not my way of doing it. I originally was an income investor. I'm still an income investor, but I also like to trade options. So I look at myself as what I call a trading investor. And it does make a difference, because if you're just purely a trader and you're not looking to own the shares, then you really have to take less risk in some ways with your trading, meaning you probably need to use stop losses. You probably need to set a gain, meaning if you're 50% profitable, you close the trade. The most successful traders are the ones who do that, and what happens is they end up doing more trades. So, not doing that, they may do 3 or 4 on a particular position during the year, but if they do that, then they may do double, like 8 or 9. Something just to keep in mind. Now, finally, the other important point I wanted to kind of reiterate is this emotional maturity, being patient with rolling, with determining how you're going to handle this, when a stock is deep in the money and close to being early assigned. Go back to why you made the trade originally. Be sure you're not rolling yourself out of the opportunity to own a really good stock. Some of my biggest mistakes is rolling myself out of great opportunities, the potential for a company or a stock to do really well down the road. And I've had a number of them. I had the opportunity to get into Apple pretty low, Tesla pretty low. I did buy some Google and it's worked out. I did buy some NVIDIA. I did buy some Square. I don't own any Twilio. That was a mistake. I wish I had picked up some Twilio. And there's another company, App 11 application. I'm not sure the exact name, but it had earnings today and it was up 45% today. I mean, significantly. And again, I had an opportunity to own that one too. So be patient, take your time. I've had numerous positions go in the money and come back out. I probably drive my membership crazy because I get a lot of questions. What should I do with this? What should I do with that? And 50%, 70% of the time I'm saying, I'm not doing anything. I'm sitting still, seeing what happens, again, because I'm okay with owning that company typically or that ETF. So I don't want to make the mistake. And everyone always thinks about being assigned a stock that's gone down a lot, but if it's still a good company, still has good fundamentals, that company's going to rebound at some point, and it's going to rebound with a vengeance. So just keep that in mind. Just go back, look at why you made the trade to begin with, and don't necessarily get out or rush to conclusions. Patience does make a world of difference. So next, we're going to actually go into the particular trades, and I'm going to share these 5 profitable trades. I know I'm showing on the screen here 4724. I forgot to take that out. I made a copy of this screen and I changed it. I just forgot to take that last piece out. This next part that I'm going to go into is going to be the 5 trades, how profitable they were. They've all been closed or expired. And I have some other notes in there to talk about some other good, important things to keep in mind when you're trading. And as always, please subscribe, hit that like button. If you want to learn about my memberships, take a look in the description. They're growing. They're very active. My Discord has gotten very active. People are sharing their trades all day. I mean, I have the notifications on, but I almost need to turn it off because I get like 10 or 12 notifications every few minutes or so. So I encourage you to take a look. It may be worth your while. And some of the trades that the members have made, I've actually copied. I have some really advanced traders. Some of them are probably more advanced than me. I'm not so worried about being the main person in this membership. I want it to be a membership where we all learn from one another. And I definitely have some traders in my membership that are more advanced than I am and are probably making more money than I am. So just wanted to share that, and let's jump into the next part of the video. Here's the actual 5 trades that I wanted to share with you. Again, these all had really good gains. All of them have either been closed or expired. Google has been one of my favorites to trade recently. I have another vertical put credit spread that's still open. I also bought 100 shares. I did a video a while back about a different type of wheel. It was a wheel where I bought 100 shares, then I did a vertical put credit spread. And no more have been assigned to me, but I'm very happy that I bought the 100 shares when I did, because they've gone from, I think I paid 162 or 163 for them, and Google is now, I believe, over 180. So this trade I did originally back in 827. It had been rolled at once, but I closed it on 1030, vertical put credit spread, 155, 145. It was 0.197 delta, so just below a 20 delta. It was expiring a week from tomorrow, so 11/15. The price at the time when I last rolled it was 167.10, so it's gone up $13, partially because of this crazy market we've had the last couple of days. I brought in $202.46. That includes the close, and that represents right around 108% yearly return. The capital required, which is The spread minus the premium is $17.97. I've also added a new column as a request from members of assignment coverage. So if this was assigned to me, I would need $30,797.54 in my account to cover the assignment of those. A couple members wanted that. I mean, it's still the key point is the required capital, because I do have this put. If it's assigned to me and Google takes a big dive, this 145 long put would become worth a lot, and I could sell it, lowering my cost basis. So instead of picking it up at 155 and say that Google had dropped to, even like 153, this 145 would be worth quite a bit. I'd be able to probably take $2 or $3 off my cost basis. And I've done that a lot. I did that with Airbnb, and I also did that with UPS, which are both very profitable now. GPN. So the reason Google, I've been able to do a lot of trades. They're becoming my favorite, especially where I don't believe they're way overpriced. They still have like a 21, 22, maybe as high as 23 now, PE, price to earnings. Which for their sector isn't crazy. And of course, they're a great company, great profitability, little debt. They, I believe, are paying a dividend now, but just really good overall company, growing like a small company, even though they're a massive company. So GPN, this is Global Payment Systems. This is the first time I ever traded with them, and they don't move much, which is kind of good. So I closed them on early. They were expiring at 11/15/90. I sold a 90 short and an 80 long. It was around a 22 delta. I believe the next delta down might have been $5 below, like 85. And I believe it was lower than a 15 delta. At the time, it was 98.26. So I made 258.26 on this trade. Required capital 1741. It was like 164% return on a yearly basis. So this is how I'm able to compare these two. This was a little bit of a better trade, but the Google, the premium for GPN isn't always there. This time it was, but other times it isn't. But Google seems like it always has pretty good premium. Assignment coverage, again, for the 200 shares to be assigned to me minus the premium I brought in, that's 17,741 is what I would need. I'm not sure I'm going to continue to trade in GPN. I think I might, but I had some members share some comments related to them that they had issues with global payments with their businesses, and they kind of did not recommend them compared to some other payment services. So it's something I'm looking into, but this trade worked out really well. Now, T. Rowe Price, it's a financial company. I also have Franklin Resources. Both of them I like. They're good, mature companies. They pay good dividends. They also don't move that much. It's almost like an ETF. So it's a vertical put credit spread, 105.95. It had 27 delta, so I took a little bit more risk. And again, it expired on 10/18, and I made 187 after I paid a little bit more for them to close, but I still ended up having almost 135% return. So they required capital 1812. And then the assignment coverage, it would cost me $20,812 to pick up the shares. How many contracts? 2 contracts. Now here's one of the Twillos. I actually closed another one too recently, but this was the one for my cash secured put related to the wheel. And I originally picked this up, and it was going to expire November 15th. And you might have watched the previous video that where I also talked about Twillo, another good company, and they had earnings and shot through the roof recently. They may be over 90 now. But again, this is a cash secured put. So this is why I was meaning you can't really compare a cash secured put to, and it's only one contract. So I made 164 on one contract. Required capital, you see these are the same, because with a cash secured put, if it's, the required capital is the full value of the put or the strike of the put, which I believe was 64? 65. So it's 60 So 65 minus the 164, or 6,500 minus the 164. And this is like a 59% return. So if you compare this to some of the others, you'd say, oh, these aren't as good. But again, this is a cash secured put. A 60% return on a cash secured put is really good in my mind. And again, the assignment coverage would be the same as the capital required. So now with them so expensive, I'm probably going to pick a different company to run the wheel on. So my 4 trades, it looks like they all may expire out of the money. I have one more week. So over the next week, I'm probably just going to allow them to expire. And then the following Monday, I may do four more trades. I'll probably continue to do the other 2 with Chewy and Pinterest. I'll probably continue to do those. They haven't moved that much. Square's moved up quite a bit too, but not like Twillo. So I may do slightly different. I'll probably do 2 or 3 of the same and then one new one, mainly because Twillo's, in my mind, has just gotten too expensive. Now, XLK is another. It's instead of using QQQ, I'm looking at using XLK, almost like I do with XLE or IWM. But with XLK, I'd be okay with owning them. IWM, I don't really care to own them. So I did this back on 10/15, and I closed it early on 11/6. So it wasn't even open for a month. Vertical put credit spread 215, 205. So a little bit more expensive, but when you compare it to QQQ, which is over 500 now, it's still easier on the budget or easier on the wallet. It was a 19 delta. I'd rather it be a 15 delta, but again, I think it jumped by $5. So the next lower was 210, and I believe that was like a 13 delta. And it was originally going to expire in 11/15. Current price at the time was 229. I made 219.26. Again, that's after paying to close. I only paid a small amount to close it. I believe it was only like $6. And then the required capital was 1780. Again, that's the 2,000 minus the 219.26. And this had a 204% return. So for an ETF, that's really good in my mind. So I'm probably going to do another trade with them. I haven't since then, but I literally just closed it. When did I close it? 11/6. So that's yesterday. I just closed it yesterday. So I will probably look at doing another trade on them here soon. And the required capital or assignment coverage is much higher, 42,780, mainly because of it being 215, I believe? Yeah, 215. So you'd have to cover the 215. But again, it would be, the put is worth something. So, but a lot of times traders will, look to get out of it. They're trying not to have assignment, but this is another situation. I mean, it's the technology sector's done really well. So it may be, depending on what's going on in the markets, it may be a good price, and assignment may be the best choice. So all of these together would be 118 for assignment coverage. But capital required, so if you were pure trader and you close these every time versus like what I've done here, you could potentially trade these in a sub $15,000 account, this 13.5, and make 1,031 in premium. So not bad. So the notes, some of the things I learned, assignment coverage based on the strike times 100 minus put premium. Again, that was a request from a member. And it's helpful. It gives me an idea that, wow, maybe I should close this because if it gets assigned, it's a significant amount and it may be tying up, a lot in my account. But again, with buying the protective put, you definitely are more protected. Twillo is part of a recent wheel trade, need replacement. So I'll probably pick something. I am looking at something now, which I think may be a really good alternative. And it's priced at such a good price. It's around $40, and it brings almost as much premium. So that's probably what I'm looking at. I'll probably share it with the membership here before too long. And I've had good experience trading Google, Own 100. I currently have 1 covered call, 2 vertical put credit spreads expiring in December. And I'll probably do more trades with them. XLK instead of QQQ. QQQ is 505. I looked at it today. and XLK currently is 233. So definitely easier on the wallet. GPN was new trade for me. Some members had bad experience with them. Not sure if I will do another trade on them. I'll have to decide. And then T. Rowe Price has good dividend and good fundamentals. I believe its dividend maybe like 4.5%. And say play and double. You could potentially double your dividends if it does get assigned to you. So it's another situation where I'd be fine with it being assigned. If I can make 9 or 10% through doubling dividends. And then if you have a 15K account, you could have trades like this. You would not be able to handle the assignment, costed a specific gain or loss. So again, just talking about if you have a small account but want to do these kinds of trades, you just have to close them. But again, I'm showing here they all expired, and I believe most of these, I'm not sure any of them got near the money. Google might have at one point. Google, I think, got down to like 157 or 158, but now it's back. I believe it's pretty like a little bit over 180. And if you repeated something similar like this, you would have nearly 3,100. So if you only did it 2 times in a $15,000 account, and then you earn the 4.6% that Fidelity pays you, you're talking about a 28% return. You know, if you use the rule of 72, you know, you could be doubling your money every 2.5 years. So it doesn't take a lot of trades to make a big difference. And again, these are all good securities or stocks. So that's what I wanted to share with you guys. Let me know what you think. Do you have a repeatable trade where you make a ton of money that you want to share? Please leave it in the comments or leave a comment. I typically try to reply to all my comments. So, and as always, thanks for taking the time to watch the video, and I look forward to seeing you next time.